Apple is the most valuable company that we have in the stock market. Its value is upwards of $2.7 trillion, which is an incredible amount. This company has grown in value in the last 15 years and has a lot of investors, including Warren Buffett, to name probably the most famous one that owns Apple. In this video, I'm going to be analyzing Apple and determining what I value the company at, where I believe the share price would be if you look at free cash flows as well as the earnings per share. My name is Victor. I have an MBA, a lot of business experience, and I like analyzing companies to see where I can invest my hard-earned money in order to make money from stocks in the form of gains, dividends, and so forth. In this video, I'm going to be covering Apple. Do me a big favor and like my video, subscribe to my channel. That'd really help me out. Now let's get into Apple. I take every company through a process that I'm evaluating to make a decision whether I'm going to buy, hold, or sell their particular stock. It involves 4 questions followed by a decision to buy, hold, or sell. The first question, do I want to be part owner in this company? Do I like the company? Do I think they are profitable enough? Do they generate enough free cash? Do they have an industry that has very good attributes? So that's the first question. Is the company operated well? And that's really a scorecard on the management team. Are they doing a good job in operating the company? Is debt under control and less than 3 times EBITDA? And I want a discount on the stock. I invest in stocks. I'm a value investor. I want to buy at a discount and see my investment go up in value over time. Based on that, the answers to those questions are buy, hold, or sell. Apple started as a personal computer company, desktop computers, a long time ago. They did that very well. They really advanced the operating system as being a graphical interface, and they really did well. They had their trouble, I think, in the late 90s. They had to be bailed out. They were in bankruptcy. And they continued to make really good computers, laptops, and so forth. But when the iPhone came around, that was the big game changer for Apple. They were able to establish their device as being the desired device in the marketplace, and they enjoy a mid 40% market share in all smartphones here in the United States. So in that business, they have an ecosystem where they obviously make money on the sale of devices, but they make a lot of money on their app store. Every vendor on their app store has to share their revenues. I believe it's 30% of their revenues with Apple. That has become just a very profitable and lucrative business for Apple. And that's why the company is worth so much, is that they generate a lot of revenues, a lot of great margin revenues from their app store. So it's been a great story of a company that's very innovative, creates great products, and really understands marketplaces, understands their customer, and develops products that customer is really going to appreciate. And that's the story on Apple. It's a great story. I love the story. I love the industry, and really believe that Apple is going to be around for a long time. Over the last 4 years, Apple has grown incredibly fast, and they are a big company. So the law of big numbers really applies to them. They were a $265 billion revenue company, which is massive in 2018. And they got even bigger in 2022. $394 billion in revenue. That's just incredible how big they are. So they've grown just by tremendous amounts. If you just measure the amount of revenue in billions, it's pretty incredible. But it becomes really hard to grow from this point. Just 10% of growth is close to $40 billion of additional revenue, which is a huge amount. More recently, looking at the last 9 months, they reported their earnings about a week ago, and I was able to get some fresh data. They are having trouble growing. They actually had their revenues go down. If you look at the first 9 months of 2023 compared to the first 9 months of 2022, it was a 3.4% decline. So just growing at this point is really difficult. They are very profitable, but even their profits are falling. So maybe Apple's gotten to the size that they're going to be, and they're going to be flat from a growth perspective going forward. Their balance sheet's in really good shape. They have lots of cash and short-term investments, and their debt's in control, because if you measure the amount of debt, net debt they have, and then you look at EBITDA, they produce $119 billion EBITDA. So they can pay all their debt in less than 4 months. Apple generates an incredible amount of cash from operations and free cash overall. But it is a fact that their free cash flow is going down. If you measure the 9 months that just concluded July 1st, it actually went down by 11% if you compare it to a year prior. So again, the business has gotten so big that growing is very difficult. The only direction, or it's more likely that they begin to go down in revenue, go down in all factors because they're so darn big. I believe that Apple is fairly priced at this time. I just have a 1% premium that you'd be paying on shares of Apple. And what that means is that I believe that their value is $172 per share, but the marketplace will sell you shares at $174. So I consider them fairly priced. How do I get to that conclusion? I really value a company based on free cash flows and their earnings per share. And the free cash flow method for Apple, I start with their 2022 free cash flow, which is cash flow from operations minus capital expenses. And I take that number, and I'm really only taking 90%. As I showed, free cash flow is going down by 11%. So that'll be my starting point for year one. It'll be $100 billion of free cash flow. And I'm going to have it grow. So I'm going to be optimistic that Apple is going to be able to grow at 4% over the next 4 years, and then long-term growth of 4%. I believe that's being generous, but Apple deserves that type of outlook because they are such an innovative company and they have excellent products. So that's my approach with Apple. Based on that, we have a growth rate in the first 4 years, and then all cash flows after year 4 are expected to be $3.3 trillion of value. I take the current value of all these free cash flows by discounting them at 7.5 as a weighted average cost of capital. Apple has a very good balance sheet, very good credit rating, so they deserve that low weighted average cost of capital. Based on those factors, the value of those free cash flows is $2.7 trillion. I'm going to add the cash on the balance sheet and take away the debt, and I get to an equity value of $2.6 trillion, but the market cap is higher at $2.7 trillion. So therefore, using the free cash flow method, we get through it to a 3% premium on Apple, meaning I have a value per share of $169 per share if we use the free cash flow method, but shares are being sold at 174. Earnings per share turns out a number not too far from -3, but more favorable. Their earnings per share is $6.07. That's what we expect for the current year. A solid PE to be 30. They deserve a PE of 30. An expected growth rate of 4%. Based on those factors and using a formula to value a company based on earnings per share, I get a value of each stock at $179 per share. But each share right now is trading 174. So you get a slight discount using the earnings per share value method. I combine the two and I put more weight in free cash flows. I actually take 2 parts free cash flows, 1 part earnings per share, and I get to that -1%, meaning you're paying a premium of 1% to own Apple. So let me take Apple through my scorecard. Do I want to own part of this business? Do I like the industry? And the answer is yes. I've been an Apple shareholder before. I sold my shares a few years ago. I kind of regret doing so, but I did own the company. I believed in them. And the company has exceptional management, brilliant people at Apple. Their balance sheet's in excellent shape, but there's no discount available on Apple. It seems to be priced at perfection, and I'm not looking for that type of investment. I'm looking for an investment where I could see the value of my purchase go up over time. Therefore, I would just be a holder of Apple. I wouldn't be a buyer of this company. So Apple stock, in the recent past, really offered up a nice discount. You could have bought Apple stock at $130 a share, and it's trading at 174. So I, along with a lot of investors, kind of missed a boat on Apple. It could have been bought in late 2022 at a very attractive price, and it's had a terrific run in 2023, but it has had that drop in the recent 3 weeks. A lot of stocks have been dropping in the last 3 weeks, Apple included. For the year, it's up 34%, which is a great return. It's beating the S&P. So being an Apple stockholder would be a very good thing. My value is $172 per share. So right now, I'm not a buyer of Apple, but lesson learned, if it ever drops well below my valuation, I'm going to be a buyer of Apple if that happens again. Apple is part of the Magnificent seven companies that have just been off the charts in 2023. And the market cap of these companies is so big that they have really moved the market overall. And Apple is roughly right here. They've done year to date 34%, which is excellent. But some other stocks like Nvidia, really, they've just beat everybody. 191% return this year. Meta, 119%. Tesla's done great. Amazon's just on fire, especially the last couple of weeks. So, owning Apple, you'd be doing great. But other Magnificent Seven stocks have done better than Apple this year to date. So Apple is a great company. I just love their products. I've been a customer for a long time. My whole family were customers of Apple, so we really love their products. Yet the company, their valuation, I guess so many people love them that everybody buys their stock. So it's really hard to see how I could make a lot of money on Apple. It's a really kind of stable investment from a perspective of technology stocks. And I fear with Apple that, it could really drop in value, especially if their revenues continue to go down over time. Boy, this stock could be worth 30% of its valuation very quickly. Or think about this potential idea is Apple kind of took this business away from BlackBerry. If you go back about 15 years, BlackBerry was the big dominant company and they had such a big valuation. What if somebody comes out with a device that's just, game changer and it takes away big market share away from the iPhone? Apple stock would really collapse. And that's my worry of being a long-term holder of Apple. I did make money on Apple by holding it for a period of time. I felt it was time to sell the stock in 2020 and saw the stock continue to rise after that. I was wrong on that, but I did make money by holding it for a number of years prior to that. And that's the game that we play when we invest. We think we want to invest, harvest out our profits, and make the best decisions based on the data that you have in front of you. So I really appreciate you watching the video on Apple. Do me a big favor and like the video. I'd really appreciate that. And subscribe to my channel. You can watch other videos that I create like this one. With that, let me wish you the best of success in investing here in 2023.